let's not regulate this away. It's too important to the future of the American economy. And we don't have time in this today to tell you like why it is a huge threat to the American dollar. We can't lose that. The U.S. should be embracing a U.S. dollar stable coin like ASAP, because it could literally make the U.S. the world's reserve currency forever, which has never happened before. That's the power of this, right? But you got to be in it, and you got to be willing to roll up your sleeves and understand it, and you got to be willing to lose some money and take some pain along the way. Regulation will grease the skids here, make it more investable, right? And so I'm like, when we looked at standard custody, they were going to get a DFS license. We needed to put the capital up because there was a capital requirement. So we did, along with a handful of others, and invested in them. And then they got the license. And now what we did was we had a minority stake there, but we were able to take their API and integrate it with like our execution capability. So now it's seamless execution in the spot market for 16 different coins. So you can custody your coins at standard custody, in cold storage, like secure, built on the blockchain. It's a blockchain native, custody solution. The technology that we've created with them allows for there to be just, the movement of cash and coins, right? Like just think about like when you have to sell something, and you give an order to somebody, how do you know where it is? Today, Coinbase, how does the broker know where those that digital asset sits? And how can the broker, if the broker is responsible for actually executing on your behalf, how does the broker know it's going to get access to it? Right? That's why everybody's vertically integrated today, right? You got execution, exchanges, salespeople, custody all in one. And that's why they all make you put cash there and hold cash there. And by the way, Coinbase, in an unsecured fashion, like the regulators are going to have none of that over time. They'll get to it because the equity market doesn't let you do that, right? So institutions won't play in there because they know I cannot have all that conflict of interest in one roof. Not going to happen. So what we're doing is building for we think the marketplace of the future, which there'll be segregation of responsibilities, custody, execution, cash movement, will all be segregated eventually because institutions will want it. And the regulators, I think, will mandate it eventually when they get around to it. So that's what we're doing.
And you've got research as well on top of that?
It's had the knock-on effect of us, getting involved in mining. We've taken a bunch of companies public last year, digital, miners, digital currency miners. So we started there, but we just launched on Coinbase, and we just launched we're launching on a bunch of things in the payment space. And we also do, desk research. So a lot of just what's happening in the space. So we're publishing a lot. There's a lot of quant activity here. So again, that feels an awful lot like the equity markets too. And so again, taking a step back, it's sort of like if you were to come, Raoul, and you were to trade equities with Cowen, you have an expectation of how good that's going to be for you. So user experience and, in I guess tech parlance, you should have that same UX with Cowen Digital, period.
Exactly, because people that understand this, there's a philosophical movement in the space, which is, we want to be different and we don't want the institutions, but they want the institutions because people want this to be adopted and the institutions expect it a certain way. Now, can that change over the next 20 years? Sure, but it's not going to change immediately. So talk me through about bringing institutions on. What kind of customers do you have now and what kind of people are you talking to? So where is the pipeline now? Who's using it and who do you think is coming?
Yeah, it's still largely crypto native. Which is fine. Like they have a high standard, and essentially it's where DeFi meets TradFi, right? They know so much about the intricacies of this space. So when you come to a Cowen event, like we have a lot of these events, and you have TradFi guys and DeFi guys there, and there's like cold fusion when there's exchanges of ideas around it, and so we're mostly still focused on that part of the market because they're the early adopters. But we're in various stages with a number of different players. So we just added a fund admin so fund admin capability. So PolySign bought the biggest fund administrator, which is MG Stover, and we did that deal. So we invested more in PolySign along with Soros and Brevin Howard, right? It should give you an idea as to the kind of I see the hedge funds are probably more likely to get involved early, and so they won't be bleeding edge; they'll be leading edge. And then you're definitely seeing some of the fundamental players say, okay, there's going to be alpha here. I've got to get my head around this. So it's really, I don't expect there to be a tremendous amount of revenue this year, but when you look at the next 10 years, there's no reason why it couldn't be as big as, I don't know, take whatever percentage of the equity market you want to be. Is it 10% of the equity market? Is it 20% of the equity market? If it's 5% of the equity market, it's still huge, right? And I think Oliver Wyman says somewhere between 6 and 16 billion over the next 5 years.
And how do you keep your competitive advantage when Goldman and everybody else kind of breathing down your neck? I mean, they never lead, so you end up leading, they end up following. How do you think about the future to stay a step ahead and build out, the best quality franchise you possibly can?
We compete with them, and we came from behind, so it's not like anybody.
Oh, you were behind originally.
I don't know. We had cash equities in 2012. Right? Goldman was all over the cash equity space and algorithmic trading, and they had a dark pool. Cowen, I assume that we're never first, and we still got to figure out a way to make it happen every day because we're disruptors. Right. So we've grown our equity franchise 8-fold in 10 years. And guess what hasn't grown? The fee pie in equity trading hasn't grown 8 times. Right. We've done it by being disruptive and by being in places where they aren't. Crypto, digital assets isn't a place where they are today. They'll get there eventually. But by the time they do, we're going to have a lot of connectivity with a lot of clients and we'll have a big chunk of their wallet. But just to be clear, we trade about 4% of the equity market in the US. 4%. Right, I'm okay if we end up being 10% of the digital asset trading market at $6 billion. I'm probably okay with that.
And you and I know the best thing you can ever do is ride a trend. It's like if you are early in a trend, it creates everything. It's like I was lucky in my career. I rode 2 trends most of my career. One was hedge funds, and one was banking. At the time, from the 90s through to the mid 2000s, that mega and derivatives all at the same time. That pool grew exponentially and it was great. But those people who stayed at Procter & Gamble, who left university at the same time as me, nothing really happened.
Well, so you make an interesting, so I would just say the global fee pie for the last 20 years for financial services has only grown, I haven't checked this recently, but before the pandemic, it was about 2%. It's a GDP grower, global financial services. But underneath, there's a ton of disruption that happens, right? So I would argue, actually, you happen to be you were always with the disruptors, hedge funds, derivative trading, banking. You found your way to disruptors because that's endemic to who you are, right? You're a creative thinker. You have the ability to see into the future and understand trends. You're intellectually curious. You make mistakes and you quickly fix them, right? That's a skill set that you have to have if you want to be in this space. Otherwise, you just get run over. I don't know. I mean, there's a bunch of big European banks that are still exiting the equity space. Which my point is, go with God. It's fine, right? We're doing just fine over here because we understand how to disrupt it. We're just dedicated to it that well. And I just think that's when you look at this space, there's going to be an ecosystem that develops. We intend to be an important partner to the early adopters because we want to be deeply ingrained in their thought processes. We want to learn from them. We want to build products that they're going to use that we'll then improve upon to widen the net. And we'll be a vital member of that ecosystem. Because by being a vital member of that ecosystem, we'll just grow with it, by continuing to be well. And then the big banks will show up and people will do business with them. I never worry about those folks. They figure it out pretty quickly.
Final question for you. How do you get people to understand the volatility of the space? Because, a lot of these things, whether it's cannabis or whether it's biotech or specifically crypto,
right?
People have to learn to embrace the volatility. It's a feature, not a bug.
Listen, everyone knew in 1997 the internet was going to be a huge thing. A lot of money was made, a lot of money was lost. Some of the great companies in the internet weren't even invented yet, like Google, right? But if you taken a basket of like and just invested like across, you know, a bunch of them went to zero, and then Amazon didn't, right? And by the way, Amazon, no one even knew AWS would be a thing in 1997, right? So a lot of this is just putting yourself in the milieu so that you can be informed to make decisions around the trends and then going after them, right? I like to say, pets.com, right? The sock puppet. Remember that guy? Remember the sock puppet at pets.com, right? I don't know. Maybe that's some, I don't know, underfunded, algorithmic-based, like, you know, stable coin. I have no idea. I'm just saying, like, maybe, like, or maybe some other coin I never heard of. I don't know. There's going to be a lot of that.
There's going to be a lot of failure, a lot of success, and some things are going to be bigger than we can ever imagine.
Right. And so you have to be in it. Because, by the way, everybody who built huge pipes, you know, broadband pipes in 2000, 2001, most of them got wiped out because they didn't have well-funded business models. They were right in 2013 when Netflix flipped the switch, right? Just, it took 13 years, right? So, you know, in this space, there's some fundamentals you can apply. Stick with people who have business models that are rational and well-funded, because those people have the time and the ability to figure it out. And the ones that don't, probably going to get run over. Some may not, but who knows? So it's a same theme in biotech, right? Get invested with companies that are well-funded. They'll figure it out over time, right? Even with high failure rates. And that's what this space is about. So, you know, it should be in everybody's portfolio, institution and individual, in a size that you won't miss it when it's gone. And this is like a big thing I've been trying to say to the regulators. Like, let's not regulate this away. It's too important to the future of the American economy. And we don't have time in this today to tell you like why it is a huge threat to the American dollar. We can't lose that. The U.S. should be embracing a U.S. dollar stable coin like ASAP, because it could literally make the U.S. the world's reserve currency forever, which has never happened before. That's the power of this, right? But you got to be in it, and you got to be willing to roll up your sleeves and understand it, and you got to be willing to lose some money and take some pain along the way. If you do, and you have staying power, you're going to make a lot of money. That's my view.
Yeah, reward doesn't come without risk. Never does. There's no such thing as a free lunch.
That's for sure.